Well, greetings, test takers. This is Dean Tenney coming to you from my studio here in fabulous Las Vegas. Welcome to the first leg of your testing journey, the SIE. I have made a video for Series 7 called Tips, Tricks, and Memory Aids. And a lot of people who watched that video said, well, Dean, I wish that would have been available on the first leg of my testing journey. And so I'm making a version of that is about the SIE, and hopefully will help you become a better test taker on your journey. I suggest learning the information is a better way to go, but when all else fails, maybe having a test taking trick or a memory aid in your arrow in your quiver could be helpful. Like always, my channel, this video, everything's a buffet. Take what you like, leave what you don't. I'm glad to get more and more people that are using the channel for the SIE. You know, I always joke, I come into your life for a reason and a season. The reason is to pass your exams, and the season is how long it takes you to do that. So I'm glad to be with you on the first leg. Hopefully, if you're taking a second leg, 6, 7, we can help you there as well. And your final leg would typically be a NASA exam 63, 65, 66. We have content for all of that. The channel was mainly, I started the channel to have a direct connection with test takers, provide a free supplement to their paid study materials, not dependent on your firm or your test prep vendor. And the 7 has been more than half of our views. But that SIE is coming up quick. So I'm glad the SIE is out there. Share it with your folks so we can get people earlier in their journey and help them out. All right, so let's get started on today's video. Today's video is tips, tricks, and memory aids. And let's get started here. Boom. Again, learning the information is a better way to go, but when all else fails, then, you know, we whip out a test-taking trick. Now, some people are intuitively already good test takers. And so we're just trying to formalize some things that perhaps they're aware of. I don't know about you, but, you know, when I was in college, sometimes it would be, you try not to, focus on somebody else's journey, but I go, man, that guy stayed up all night, didn't study, and got a B+. I worked my butt off and I got an A-. There is folks that are better test taker than others. So we can turn you into a better test taker and just give you some confidence. That's worth some points. All right, so let's get started. We're first in the first part of the video, we're going to be talking about test taking skills. And the second part, we're going to be talking about memory aids that might be helpful on the SIE. So in this first part of the video, we're going to talk about RTFQ. Read the full question and read the full answer set. You know, I'm guilty of this. I can't tell you how many times I miss a question because I answer a question I thought was there instead of the question I was being asked. I picked out a couple examples of this, even one that I recently just missed myself. As a person who knows it's embarrassing to miss an SIE question, right? So, and you have a long question. You know, sometimes you get these paragraph long questions. You go, oh my goodness, where does this thing end up? So one thing you might want to do on a longer question is read that last sentence. First, I have some examples of this based on the SIE content that we'll look at. Basically, I pull questions from the FINRA SIE practice exam on the FINRA website and some Kaplan questions, and then some questions that are my questions that I use in my content. Project the correct answer. So sometimes, you know, I know something, and so I'm looking at the answer set. It's not offered to me. And so I got to say, okay, well, here's the answer I had in mind. What is the answer that most closely approximates what I'm looking for? Process of elimination. This works really much better as you get better and better at the content. As you lay more base content, you'll be able to eliminate some answers. And even if you can't eliminate all of them, I mean, if we can eliminate 3, we have the answer. We've arrived at the answer. But even if we get like 50-50, we eliminate 2, then, you know, that gives us a 50-50 rather than 1 and 4. That's a great way to go. And again, we'll do an example of that. Reduction to the ridiculous. This is one of my favorites. This is where you take an answer that's offered to you and say, okay, if I say that's true, what kind of a world does it lead to? Can it sustain itself in terms of reduction to the ridiculous? I can't tell you how many times I've used this over the years with people I'm supervising, you know, and I say, okay, so that's your answer. Is that really the answer you want to tell me? Because now we're going to take your answer and see if that really will withstand reduction to the ridiculous. The principle of mutual exclusion. This is like Two things that can't be true in the same universe. For example, Socrates is a dog. Socrates is a philosopher. You can't be both a dog and a philosopher in the same universe. He's one or the other. The Sesame Street trick. I call this one of these things is not like the other. For example, taxes, 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 fees. I said, oh, that's the one I like. True, false next to each answer. So we read each answer offered to us and put a T or an F next to it. And again, this is very helpful, particularly on the accept format, because they're asking me which is true or which is false. And again, it's like the others we've talked about. You can use them in conjunction with each other. But even if you don't get all of them, at least if you get a couple of them, you're levering your way into a better odds, a higher probability of a right answer. Too long to be wrong. This is based on test writers. So test writers, a lot of times what they do, I have a friend who gets mad at me because he falls prey to this all the time. He starts by writing his answer. Lots of test writers do. And he writes a beautiful answer and then the question, and then he fills in the distractors. Distractors, the technical name for the wrong answers. And, I say, man, he really likes that choice D there because it's a paragraph long. So it's either a really great distractor or it might be the right answer. Now, remember, we only use these when all else fails, but I'll give you an example of this as well. So remember, these are to be used, after all else fails. So learn the information. And then after we get done giving you examples of these, we'll talk about some memory aid devices. So let me flip over my little egg timer. I'll try to keep these in a reasonable length of time, but my channel is longer form content. So there's a pause button. I don't feel any need to be too worried about, staying on the clock. All right. So read the full question to RTFQ. Here we go. A company issues stock. The stock issued is junior to the bondholders in liquidation, and the stockholders will only receive a dividend if declared by the board of directors. Now, if I don't read the last sentence and I just shop the answer set, I think the answer is A, common stock. But then it says, last sentence, so important, the stock issued will have no voting rights. And so that means the answer is not common stock. The answer is preferred stock. So there's an example. If you don't read the full question, I told you, this is the one I fall most guilty of myself, is not reading the full question. Here's another example of reading the full answer set. So how are securities issued by a municipality treated for tax purposes? Choice A says they pay exempt from both state and local. And, again, I might be going quick and say, okay, well, it's A. But I go, why don't I make sure that there's not something being better offered to me? B, interest paid is fully taxed. Absolutely not. I can toss that out. The interest they pay is not taxed at the state, local, or federal level. D, the interest they pay is federally tax exempt. So now I got to think, okay, well, what's the best answer? Well, you can't tell me A or C without determining suitability. So without knowing where you live and what kind of bond you're going to buy, you can't tell me A or C. So D becomes the most appropriate answer. So there's an example again where if you don't read the full answer set, now don't bringing extra stuff into questions. I can't tell you how many times people overthink things. I had a guy who gave me a scenario the other day, and I said, where is that in the question? Nowhere in the question does it have anything like that. He says, well, so you make sure you don't bring extra stuff. Here's another one. Here's one that I missed because again, RTFQ. This is one from Kaplan's QBank. Shout out to Kaplan. Kaplan allows people to get free look at Kaplan content. My viewers, subscribers, members. And if you choose to supplement with a Kaplan QBank or a Kaplan Quick Sheet, which I highly recommend, my discount code at checkout is Guru10. You get a 10% discount. For giving the commercial, we get to use Kaplan content and stuff like this. Anyways, here's ones I missed yesterday going over an SIE practice final with somebody. Your client, Janice Thomas, is an active investor and wishes to invest in a managed equity portfolio. Now, I missed the word managed, that she can trade intraday. So Dean missed that word, and I thought, oh, she's an active investor. ETFs are a trading vehicle that people trade on a daily basis. And I picked D, an exchange traded fund. But exchange traded funds are typically passive managed. So by missing that one, or passively, not actively managed, I always say that. By missing that word managed, I missed what should have been a pretty easy question, which is a closed-in fund, right? Very test will be able to contrast. By the way, again, this isn't a lecture, but boy, that answer set is very testable on your SIE. So you better be able to tell me what an ETF is, what an ETN is, what a closed end fund is and contrast open with closed and open with ETFs. But anyways, that's not what today's video is about. Today's video is about tips, tricks, and memory aids. So the answer there was B, and yours truly missed it with D because I missed the word managed. I just locked on to intraday, active investor, and ETF, Read the last sentence first. So here's an example of that. I got a paragraph. I go, oh my goodness. Which of the following stocks would be resilient to the business cycle? I go, oh, okay. None of that other stuff matters. It's a defensive stock. And now I accidentally gave you some helpful information about what a defensive stock is, right? So that first part has nothing to do with answering this question. So sometimes I like to read the last sentence first just to kind of see where it all ends up. It doesn't mean I'm not going to read the whole question, the full question. But if I read that last sentence, sometimes then I say, okay, this is where it ends up at the end of the day. I didn't put the answer here, but we can again shop the answer set once we're done. So here's an example where I know the balance sheet equation. The classical balance sheet equation is assets minus liabilities equals net worth. And so I'm looking for that as an answer. I'm looking for assets minus liabilities equals net worth. And I go, damn, that ain't offered to me. So you don't want to panic and say, man, I thought I knew this. So then what you got to do is once you projected the correct answer and it's not there, maybe it's there. You go, okay, there's the answer I'm looking for. Boom. But every once in a while, that answer may not be there. Okay. Well, I know this. What's something that's similar? And I would say, oh, D. Yeah, the balance sheet balances, right? Assets equals the liabilities plus the net worth. So the answer is D. So the key thing here is when you're projecting the correct answer, hopefully it's available to you. And then the other thing is, if not, then what you want to do is find the answer that, is what you're thinking. This can be particularly helpful if you are using a test prep vendor. I think Kaplan is the best QBank, but if you're using a test prep vendor and you've learned the information, you won't be as fall prey to this if you actually know the concepts and not haven't memorized phraseology. If you've memorized questions and answers and phraseology, but you don't have an understanding, it's easier to miss questions you shouldn't miss. So you should be able to kind of reverse engineer an answer that's similar. That being said, most of your SIE is indeed recognition. Process of elimination. I pulled this one from the FINRA practice exam version 4 on the FINRA website. And so process of elimination means I'm going to eliminate answers that I, think aren't going to be right. So when was I going to have my annotation tool? You can't write on their screen because they'll get upset with you. But, volunteering as a youth soccer league coach. I go, well, no, volunteering isn't something for pay, and I can eliminate that. That's not something I'm going to have to tell my firm about. Process of elimination, gambling resulting in winnings in excess of $10,000. So you come visit Dean here in Las Vegas, and we have dinner and drinks, and you go out on the tables and you win $20,000. Now here, what they're probably trying to get you to think, isn't there something about 10,000? There is. It's called a currency transaction report, but that has nothing to do with answering the question. So they're very good at an answer set giving you something. You go, man, that sounds familiar. That 10 grand. That 10 grand has nothing to do with this question, which is about a registered rep making written notification to the firm. This rule is called outside business activities. And this is not an outside business activity. So we can eliminate that one. Driving part-time for a transportation network company on weekends. So yeah, does your broker dealer want to know if you're driving for Uber or Lyft? They most certainly do. Now, maybe I'm not sure about C, but then I look at D. Let's suppose I'm not sure about C. So rather than marking it out, I say, well, let me look at D. Selling non-proprietary investment company securities products through her firm. Oh, that's what you do. That's a mutual fund. That's your firm having a selling agreement with Franklin Funds or American Funds or some mutual fund family. And, it doesn't matter, by the way, if it's proprietary or not, as long as it's, again, on your approved product list. And so D does not require you to make written notice because your firm knows you're doing that. In fact, that's what you're supposed to be doing. So through process of elimination, the answer is C. Now, by the way, even if you can't get all of that to the final answer, at least now, let's say I wasn't sure here, 50-50 is still better than, 1 and 4, right? So Here's reduction to the ridiculous. So remember, reduction to the ridiculous is this idea, does this, can this be truthful? So all the following are true of Uniform Transfer to Minors Act, our Uniform Gift to Minors Act, except the minor's ID is used. That is true. One custodian, one minor per account. That is true. No margin. That is true. Now, remember, if I did my work, I probably don't need a trick here. I go, okay, well, I know those are true, so thank you very much. It's D. But let's suppose you weren't sure about A, B, or C. And you look at D and it says, if a minor dies before the stipulated age, the assets go to the custodian. So you say, well, now let me think what that would lead to. That would lead to a world, reduction to the ridiculous, where custodians are killing minors to get control of the assets. That can't possibly be true because it doesn't sustain itself in reduction to the ridiculous. So this is where we take an answer like D and say, okay, I'm not sure if that's true or not. Let me see what it would lead to if I take it to its nth degree and see if it can sustain itself. If it can, then it's a good answer. I told you this one I used to use all the time, with people I'm supervising, saying, okay, that's your answer. Are you sure that's the answer you want of all the answers available to you? Because now we're going to see what the world looks like if that is an answer that is, acceptable and works. We talked about this one, principal of mutual exclusion. So as a good test taker, I don't need to burn up brain cells on C and D. I don't have to burn up brain cells on C and D because A and B are mutually exclusive. It can't be A and B in the same universe. This is, Socrates is a dog. Socrates is a philosopher. He's one or the other. So here it says convertible debt has a higher coupon. B says it has a lower coupon. It either has a higher or a lower. So even if I don't know the answer to this question, I have a 50% chance, 1 and 2. A conversion feature, we're not lecturing, is an advantage to the issuer and it lowers the coupon they would pay. So it said except, now I got to be careful because it said except. So A, it doesn't have a higher coupon, it has a lower coupon. By the way, if you are getting good as a test taker, the other thing now you can do, knowing that it's A or B, is know that C and D are truthful information that they gave you for free that perhaps you can use down the road. So I say, well, before I move on to my next performance opportunity, that's what I call questions. I said, let me see what C and D says. Oh, potential dilution. Well, I didn't know that. Thank you very much. Or I did know that. Oh, well, let's see if I can get some free information on D. Conversion terms have to be adjusted for stock dividends and stock splits. Well, I knew that too, but if I didn't, I say thank you very much. Here's another one. I pulled this one from the SIE practice exam. And principal mutual exclusion means we can just go down to the answer set and C and D say opposite things. So it can't be C and D in the same universe. C says higher management fees and D says lower management fees. It's one or the other, right? So it says, which of the following best describes? By the way, that means I know A and B doesn't describe that. You buy an index fund because, you are going to have be more efficient. You're willing to accept a market-based return. So it says, which of the following best describes lower management fees due to the passive management of the fund? The answer is D as in dog. Again, we're not doing lectures here on an index fund. What we're doing is talking about tips, tricks, and memory aids. And this is, again, a trick where I say as a test taker, it can't be C and D in the same universe. So I have a 50% chance, even if I don't know anything about index funds, right? Which is the point of being a good test taker. Sometimes, people who are good test takers can get questions right that they probably don't deserve to get right, but they're good test takers. Here's another one. I pulled this from Kaplan. This is a shout out to Kaplan. This is Kaplan QID 1465298 if you're using the Kaplan QBank for your SIE study effort. And again, I shot the answer set and C and D say different things. It can't be both C and D in the same universe, right? So C says you're subject to volume limitations and D says you're not. So it's one or the other. An officer of a public company buys 1,000 shares of the company's registered stock in the open market. There's no hold on that. When Larry Ellison became a board member of Tesla, he bought 3 million shares of Tesla in the secondary market. There is no hold on that. And then Tesla gave him another 1 million shares for serving on the board. That is unregistered stock he got directly from the issuer. That would have a 6-month hold. But here, there's nothing about stock that is unregistered that you got from the company. And so You don't have a 6-month hold on it, but you're going to always be subject to the volume limitations, D. And again, we're not talking about, lectures here. We're just talking about test taking tips, tricks, and memory aids. And here's another example of mutual exclusion. C and D say opposite things. So it's typically going to be one or the other. Sesame Street trick. One of these things is not like the other. Now, again, it would always be better that if you knew revenue bonds are backed by user fees. But as I shop the answer, I say taxes, 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 fees. Fees looks different. So I think I'm going to go with D, right? So there's an example of a Sesame Street trick. So I don't know. I'm dating myself. I don't know if you guys know what Sesame Street is. Sesame Street was an educational PBS show, and they had this segment called "One of These Things Is Not Like the Other." They show you, apple, 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 orange. I was watching a game show the other night. It was Tajikistan, Pakistan, Kazakhstan, and India. And not knowing the answer, I thought, well, India is different. It doesn't end at the stand. So it'd be better that Dean knows his geography, but I go, okay, I'm going to go for that one. Here's another one. So again, I didn't even put the question here. I didn't even put the question up here, but here's the answer set. And I say, man, that tip thing looks different. Now that's a Treasury inflation protected security. And I don't know what the question is, but again, I'm predisposed to say I like D. Maybe the question is which of the following keeps pace with inflation, something like that. Now, again, it may not be the answer. Don't watch this video and then start sending me all kinds of examples where the tricks don't work, because remember, the tricks are our last resort. They're not something you're supposed to pass the test with. It's when all else fails. So, you better read the question. If it says which of the following is issued at a discount, it's going to be A. So, these are tricks, tips, tricks, and memory aids. Put T or F next to each of them. So generally speaking, non-qualified plans. So non-qualified plans. Non-qualified means they haven't met the qualifications of the Department of Labor and the terms under ERISA and the IRS. So must have IRS approval. The answer there is false. You need IRS approval for qualified plans, not non-qualified plans. They must have a trust agreement. That's false. That's true of qualified plans. May not discriminate who can participate. That is false. They can. Deferred comp would be an example. They're funded with after-tax dollars. There's their true thing, right? So, again, very important. Again, RTFQ, N-O-N, 3 letters that change this question dramatically. By the way, it could have been another version of this answer set. Could have been all following are true of qualified plans except qualified plans, and it would have been D. So maybe you can put a T or an F. Maybe you can't put the T or F next to them, all of them. But again, if you can put one T and one F, you get to a 50-50. So you're always trying to, as a test taker, lever your way into a higher probability of success on the question. Too long to be wrong. Too long to be wrong. So here's another one I picked from picked out of the FINRA practice exam version 4. Blue sky laws are regulated by which of the following entities? Now, I would prefer that the answer, that SEC is federal. I would prefer the MSRB is the Municipal Securities Rulemaking Board, and they're ones who publish that rule, G37, $250. And I would want FINRA is a self-regulatory organization. But, again, these are tricks that when all else fails, I go, man, that longer answer, D, state securities regulators, right? So D is the longest answer. I told you why test writers fall prey to this. The guys who write tests, as I told you, they start with what they're trying to test you on, which is this idea of the state regulator, and then they reverse engineer their distractors. And the distractors, again, are the technical name for wrong answers. Okay, so that was our going over our last one. This, again, I didn't even put this on the agenda, but guess B and move on. Hopefully you're operating from abundance and scoring well in your practice exams. So I was teaching a weekend class. I taught this weekend class for years for this investment banking firm. And this is the cream de la cream, the top men and women from, Harvard and Princeton and Yale and Stanford and University of Pennsylvania, the Wharton School. And then they come, into a class and I get them prepped for the Series 7. Anyways, what I used to do is strip off the answer key and just give them the practice questions and go over, them with the next day. Anyways, this guy, I heard him telling somebody to guess B and I teased him unmercifully. You know, my problem is I don't know when it's not fun anymore. I said, man, how much did we spend educating you? And what you learned was to guess B. Anyways, next morning he threw back my answers at me and he said, Dean, 44% of your answers are B. Without the answer key, pretty impressive. So anyways, he said, Dean, we did a survey of people who write cram courses. And we know that people who write cram courses and write tests, more importantly, people write tests, psychometrics is the art of writing tests, know that people in cram courses are told primarily to guess C. And people write tests know that. And so they statistically shy away from C. And so C used to be your best guess, but now it's B. Now, listen, again, I suggest learning the information, but ever since that guy said that, when I have absolutely no clue on an exam I'm taking, I guess B, I assign it to the universe and I move on. Hopefully, again, you have abundance and you know that you can assign 2 or 3, 4 questions to the universe, guess B, and make it up elsewhere. Now, in your study efforts, that's where you want to get. You don't want to be in an area where any one answer is going to make or break you in terms of pass fail. All right, so those were some tips and tricks as it relates to answering questions. And so now I'd like to share with you some memory aids that might be helpful on your SIE exam. So 1, 2, 3 is a good way to remember accredited investors. 1, 2, 3. So the 1 is to remind ourselves if it's $1 million exclusive of their primary residence. So there's our 1. Let me get a bigger font here. And then the 2 is $200,000 in annual income with the expectation of $200,000 this year to be accredited. And if they're married and filing jointly, it's $300,000. So a good way to remember that is 1, 2, 3. An accredited investor is somebody who has $1 million net worth exclusive of their primary residence, 1, or $200,000 in annual income for the last 2 years with the expectation of that this year, or 3, $300,000. So 1, 2, 3. You should have been able to eliminate a quib. So you should have been able to get it to an answer set of either A, B, or C. The answer here is B, but you should have been able to eliminate D because you should know that a quib, a qualified institutional buyer of securities, is an institutional investor managing a test question, assets under management of 100 million or more. And what a quib is allowed to do is buy unregistered foreign and domestic securities. So again, just throwing in now process of elimination with a memory aid device. So 1 and 3, and then 1, 2, 3. 1, 2, 3 is a good way to remember accredited investors. All right, let's try our next memory aid device. Customers buy high and they sell low. So this is a helpful thing to remember if you're looking at, let me get a bigger font. You're shown a quote from a market maker, and so let's say, they show you a bid on the test, and they show you an ask on the test, and they show you 15, 16, 5 by 5. And so as Dean just said here, when you're asked about customers, the customers always are buying high. They can buy right now, a customer can buy 500 shares at 16, and the customer can sell 500 shares at 15. So the customer always pays the high price. The customer always receives the low price. What's that called? The securities industry. Let me give another example. Here's an NAV and a public offering price. And let's say the NAV is $9.15 and the public offering price is $10. So again, the memory aid device here is the customer always pays the high price and always receives the low price, right? So I have a whole video on knowing your bid and your ask. So 15, 20 minutes on this. It's definitely worth the watch. Okay, but that's not what we're doing today. Today, we're doing tips, tricks, and memory aids. All right, so let's go to our next memory aid, which is ABC. ABC. This one is good to remind ourselves that we're all called broker-dealers, but in any one transaction, we're either going to be acting in our broker capacity or dealer capacity. And so this one is good for knowing that A means agent, B means broker, and C means commission. So that's to remind us that when we're acting in an agency capacity, because you got to disclose capacity, right? So I say, Liz, when you open an account at Merrill Lynch, when you open an account at Merrill Lynch, we are a broker dealer. In some transaction, Merrill Lynch will be acting in its broker agency capacity and charge you a commission. And in other transactions, they'll be acting in their dealer principal capacity and charging a markup or a markdown. Now, this is also a good memory aid device for what is an investment advisor. So we have investment advisors, investment advisors. We can use our ABC again, but this is for a different memory aid device. If the firm, broker dealers get paid through transactions. But if it's, I tell you on the test, it's somebody who gets paid for advice. I tell people I'm in the business of giving investment advice. There's the A. I'm in the business of giving investment advice. There's the B. And I want compensation, a fee, A, B, C. I'm an investment advisory firm. So this is a memory aid device that works for capacity, and it works for determining whether somebody is an investment advisory firm. Okay, so our next memory aid device is action asset amount. So this is helpful in terms of trying to determine whether or not we need discretionary authority. So if action is whether to buy or sell the security, asset is which security to buy or sell, and amount is the quantity. So if the three A's are present, it's an acceptable order, right? So let's try one. Buy, there's the action, where the buy or sell, buy, action. GE, there's the asset, 10,000 shares. That's an acceptable order. We do not need to have discretionary authority to make a decision about time and price, right? So the three A's is a way to help us go through a question answer set and say, okay, they'll say, like, for example, in the exam, maybe which of the following is a discretionary order? And you're looking for one that's missing one of the three A's. By the way, if it's missing one, two, or all three of the A's, it requires discretionary authority. It does not require discretionary authority to make a decision about time and price. Buy 10,000 shares of GE today, work the order, get me some good execution. That happens all day long. That is not a discretionary order. There's a jumbo CD of 100 grand coming due. Buy me whatever utility stocks you think looks good. Actions there, amounts there, but not the security. Can't accept that without discretionary authority. So that's a nice memory aid device for determining discretionary authority. Again, on the test, if you can't remember, how to do the split, for example, if it's a 3-for-2 split, I take 3, lots of ways to do it, but I take 3 divided by 2, and then I times it by whatever the position was, and that gives me the, adjusted price. But here I'm just sharing with you that if you can't remember the mechanics of doing a stock split, not what we're doing in this video, we're just going over memory aid devices. I would like you to be able to shop your answer set and know that it's either going to be more shares at a lower price, right? So if it's a 2-for-1 split, I got more shares at a lower price. And many times in the answer set, as your practice drilling and rehearsing, just shop your answer set and you can get to a 50-50. If it's a reverse split, I'm looking for an answer that has less shares at a higher price. So again, I'm not going to show you the mechanics of that because that's not what this video is about. Again, I'm just sharing with you some tricks, tips, tricks, and memory aids. This is a trick to get the answer set to 1 and 2. And a lot of times, you don't even have to fire up the calculator. You can just say, oh, there's only one that offers me more shares at a lower price. Or oh, there's only one that offers me less shares at a higher price if it's a reverse split. This is just one I've made up to make it make sense. So when I say governments are goofy, I'm talking about government securities on the test, which are treasury notes and T-bonds. And I just call them goofy because it makes it easier for me to use this memory aid device that governments are goofy. And then, the test significance is how are they goofy, right? They're goofy and that they settle T+1. So a good way to remember this is governments are goofy. They're goofy and that they trade in 30 seconds, right? They're goofy and that they use an actual calendar. Remember corporate and municipal bonds use a 30-day month and 360-day calendar, and this uses an actual 360-day calendar for calculating accrued interest. So governments are goofy, or just a way to remind myself, Govies are goofy. They settle T+1. They trade in 30 seconds, whereas corporates and munis are T+2 and trade in 8s. They use an actual calendar, not a 30-day calendar, 360-day year calendar, but an actual calendar, 365, for calculating accrued interest. So a good way to remember how governments are goofy is that Govies are goofy. If you remember Govies are goofy, then you can kind of say, okay, well, how are they goofy? How are they goofy? A lot of times you can get questions right by covering up the screen. Or they ask me about paper prospectuses. 33 is the Prospectus Act. So if they're asking me about the cooling off period, or they're asking me about tombstones or preliminary prospectuses, or things like that, I say, okay, I cover up the screen. This is about paper prospectuses. This is 33 is the answer. If they're asking about people and places, then 34 is the answer. People and places, like the SEC was created under 34, or exchanges have to register places, market centers like NASDAQ, New York, need to register with the SEC. So people and paper and people and place is a good way to distinguish between 33 and 34. Primary versus secondary. So, you're definitely getting questions about, is it primary or secondary transactions? And so what you want to know is, where is the money going to? The money in a primary transaction, the issuer is receiving the proceeds. So you want to go through the answer set and say, okay, well, if the issuer is receiving the proceeds, then it's a primary transaction taking place in the primary market. And if the previous owner is receiving the proceeds, then it's a secondary transaction. And again, you are going to have to distinguish between primary and secondary transactions. By the way, all the transactions that are previous owners receiving proceeds is called the secondary market. And then all the primary transactions together are called the primary market. So definitely should be able to determine them between primary and secondary market. And the way you do that is by who's receiving the proceeds. 144. So 144 is a good way to remember 144, right? So on 144, we file the form. We can sell up to 1% of the outstanding stock, or the average of the last 4 weeks trading volume. There's the 144. Whichever is greater. Let's get that there. Up to 4 times a year, every 90 days. So a good way to remember 144 is 144. We can sell 1% of the outstanding shares, or the average of the last 4 weeks trading volume, up to 4 times a year, every 90 days. So I think that's a good way, good memory aid device for that. One, 4, 4. Okay, our next one is DATO 15. DATO 15 is to help us remember, test, question the sequence of the events. And so D is for disclosure. We're going to give you the disclosure document, the characteristics and risks of options. And then I'm going to go get your account approved by an ROP. And then once your account is approved, you can do the first trade. And then we have to have back from you the option agreement. And we have to have back from you the option agreement within 15 days. If we don't get that back from you in 15 days, we're only going to allow you to do closing transactions. closing transactions. So again, a good way to remember that is DATO 15 in terms of that sequence. That sequence is testable. And so we're just giving you some memory aid devices that you might find helpful. Let me get a different color for that. Cool. Remind us this chronological sequence. Other people's money accounts. This is to help us remember what a clearing firm does and what is necessary to clear a trade. Other people's money account, OPMC. And so we'll use this for is to remind ourselves that the order flow, the first place an order goes to is the order department. And the order department is going to wire that order to the appropriate exchange or market center for execution, either, New York or NASDAQ. And once it goes to the order department, the next department it goes to is the P&S department. P&S stands for Purchase and Sales Department. And they're going to generate the confirmations and have to be in the mail by settlement and settle the trade. So that's called purchase and sales because, our customers either buying or selling. And then once it goes to the P&S department, then when it goes to the margin department, who determines whether any monies or securities are due. And then once it goes to the margin department, the last department that gets it at a brokerage dealer is the cashiering department. So these are the 4 departments found in a clearing firm. A clearing firm is going to have an order department. It has the ability to transmit or wire orders to the appropriate exchange for execution. Has a P&S department that can generate confirmations and match trades. Has a margin department that can determine whether monies or securities are due, and has a cashiering department that collects the monies and securities. That fashion is called the cage. We cage the brokers out of that area. So again, a lot of us don't have these departments. We use a clearing firm to provide this back office to us, right? So this is a good way to do it. If you don't like order peanuts or other people's money's count, remind us of OPMC. Another one you can use is order peanuts, Mr. Carter. But this is the order flow through a clearing firm to clear a trade, right? We do the trade and then we clear it, and this is that process. DERP is to remind us of the chronological order of dividend, the dividend process. And, DERP, the first thing that happens is the board of directors declares a dividend. That's called the declared date. And then they say they're going to look at their shareholder list on the record date. And if you're a shareholder as of record on that date, you're going to get the dividend. And then they're going to decide when to pay the dividend. And those three dates are set by the board of directors. But remember, the X date is a function of the Uniform Practice Code, which standardizes secondary trading in the securities industry. And so that's not set by the board of directors, but in chronological order, this is a way to remember that chronological sequence. The X date is 1 business day prior to record, 1 business day prior to record, and it's the first date on which the stock no longer trades with the dividend attached. So we're going over memory aid devices, and this memory aid device is DERP to remind us of the proper chronological sequence in terms of what happens with dividends. DI 90 is to remind us how much of a mutual fund and a REIT must flow through to the shareholders. And the D is for the dividends from the stocks in the mutual fund portfolio, plus the interest from the bonds in the portfolio, minus the expenses, whatever that number is, the mutual fund or REIT would have to pass through 90% of that. So this is a good memory aid device to remind us that REITs and mutual funds must pass through 90% of their net investment income. DI 90. Yield to price. So again, this isn't a lecture. I have a whole lecture on the teeter-totter. So an entire 15-minute lecture just on the teeter-totter. And I love the teeter-totter or seesaw because it turns, judgment questions into aim and shoot, point and click questions. As I told you on your SIE, it's primarily recognition, but the three styles of questions are recognition, practical application, and judgment. Judgments are the hardest types of questions. Judgments are like suitability questions. You're not going to have to do much practical application, but you should be prepared to do a stock split, as I just told you, 3 for 2, and tell me how to do that. You should be able to do that mathematically. You should be able to do current yield mathematically on your SIE. You should be able, these are practical application questions. You don't want to miss math questions because, there's no interpretation of the right answer. And then you should be able to do tax and tax-free equivalent yields for sure. Those are all high probability math questions on the SIE. The rest of it, potpourri, right? But those are high risk. Anyways, you do definitely need to know the inverse relationship of interest rates and bond prices. If anybody ever asks you about economics, finance, or investments, you want to sound smart, you should say it has a lot to do with interest rates. And so what the teeter-totter helps us do is see what happens when interest rates go up or down, right? So I'm not going to lecture you now here on this teeter-totter and how to use it to answer questions. I'm just showing you what it looks like, for example, if interest rates go down. You are going to have to be able to crunch current yield. You won't be able to, I'm about to show you yield to maturity, yield to call. You don't need to worry about crunching that. Just a matter of the relationship. But as I'm showing you here, the teeter-totter helps us with this relationship. I know if it's a bond at a premium based on the teeter-totter or seesaw, the current yield is going to be lower than the nominal yield. The yield maturity be lower still, and the yield to call will be the lowest. And that's the opposite for the discount. Right. And, again, if you tell me you didn't understand yield to price or price to yield relationships based on interest rates and bond prices, that inverse relationship, and that's why you missed your SIE, I'm going to say, why didn't you watch my lecture? No, I'm not going to say, I don't think it's a big deal. So again, in this video, we're not trying to lecture you on how to use the teeter-totter. There's a separate lecture on the playlist for you if you're interested in that. Now, another great memory aid device is SLoBS over BLiSS. Now, I'm mentally lazy, and so I don't even put SLoBS there because I know it isn't a buy limit or a sell stop because those go below the market. Then it goes above. So that's how lazy Dean is, right? So this is worth some points. So this is where we place orders in relationship to the market price. Again, this isn't a lecture on types of orders. I have a whole hour lecture on that you can watch. This is just memory aids to help you remember things you should know or remember on the test. Recall. These are called recall questions. Now, if you want, you can also remember SLoBS and SLoBS over BLiSS, where orders are placed. Now, the O is just to make it a mnemonic. But sell limits and buy stops, whether you want a buy stop that turns into a market order or a buy stop that turns into a limit order, is placed above the market. And BLiSS, SLoBS over BLiSS, yet a memory aid device, tells us where we place buy limits and sell stops. Sell stops either get triggered into a market order, if they ever do, or a sell stop that turns into a limit order. Those are placed below the market. So that one is worth a couple points at least on your SIE exam. By the way, I would tell you all of these are going to be something learn it once, get tested twice if the second leg of your testing journey is a Series 7. Options, call up, put down is really great for options. Call up is a way to remember that if the market price is up from the strike price. So, let's just right now, Apple is 154. And so call up is a nice mnemonic because call up, if the market price is up from the strike price, the contract has intrinsic value. So this 150 call has 4 points of intrinsic value because the market price is up from the strike price. Call up. Again, this isn't an options lecture. I have hours of option lectures. No surprise. I recommend you watch them, particularly the first 3, right? I got 3 hours of lectures on options for you on the SIE. If you tell me you missed the SIE because of options, I'm going to say I don't believe you. However, there's 3 or 4. Most of it, again, is recognitions, like when do options expire? When do options settle? When do they, how does the OCC assign exercise notices, American style versus European style, that kind of thing. But that being said, this is also good call up, put down for break even. Break even in a call contract is 150 plus 8, 158. Now that's the same break even, by the way, whether you're long or short. It's just a matter where you would want Apple in relationship to that. So a great mnemonic device for options is call up and put down. Now let's look over here at a put. We have two types of contracts, calls and puts. You can either buy them or sell them. So we have four basic positions. Now here, to answer the question about intrinsic value or break even, you don't need to know the position because it's the same break even. But if you're long, you want it above 158 Apple or short below. Again, this isn't an options lecture. Now, if we look at Apple, and Apple is 144, put down. The market price is down from the strike price. MP means market price, put down. So this contract has 6 points of intrinsic value. The break even would be a 150 minus 6. 150 minus 6 put down. Now, where you want it would be in relationship to that. Right? Your break even would be 144. If you're long the put, you want it below that, short the put. So we have two basics. Now, again, this is not an options lecture. But again, another thing you might find helpful as it relates to options is what I call the options matrix. And I'll leave it to you to, again, go learn how to use the options matrix. But, the options matrix, not a box with 4 squares. We have two types of contracts, calls and puts. You can either buy them or sell them. So we have 4 basic positions. And again, we're talking about memory aid devices. I'll leave it to you to watch the first lecture that I have in the playlist for you for the SIE, where it shows you how to develop this matrix step by step. But assuming you have the matrix and you can data dump it when you show up, or you have in your head, I say, wait, can you tell me about a short put? And let's assume you know nothing about options. You say, Dean, when you're short a put, your break even is strike price less premium. You're bullish. You receive the premium. You have an obligation to buy the stock at the strike price. Your max gain is the premium. Your max losses break even to 0. You might not have any clue what you just said, but it's technically correct. So I would suggest maybe working on developing your ability to flesh out this matrix, not a box with 4 squares. Matrix means every one of these quadrants relates to some other quadrant. If you get the long call down, by the way, you don't have to memorize short call. You just literally could write the opposite and you'd be correct. Okay, so again, it's not an options lecture, but make sure particularly if you're taking a 7, I would tell you that whatever you invest in your study effort on the SIE is going to pay huge dividends on both a 6 and a 7. The 6, there's a lot of overlap. I think you can almost pass out of a 6 if you do a good job on your SIE. There's going to be a lot less options. And then 7, you're laying base that you're going to need in your 7. As I just told you, there's only 3 or 4 questions on options on your SIE, and most are recognition. But on your 7, if that's your next leg of your testing journey, that's going to be 20, give or take 5. And there's going to be advanced option strategies and other things. So why not pay the price now? Okay, so I hope you found that helpful. Remember, inch by inch, SIE is a cinch, yard by yard, SIE is hard, and I'll see you for the next installment. I should have another SIE practice exam, depending on when you're watching this. We premiere them on Thursdays, and there should be another practice exam up. So there'll be a total of 5 SIE practice exams. The FINRA one, where you can watch me literally go through the FINRA exam. You can hit pause, watch me answer, or you answer, watch me answer, talk about it, and then hit play. There's a Test Geek practice final. There's a Guru practice final. That's my social media handle, one that I've written. There's a Kaplan practice final, and I'm about to put up another Kaplan practice final. So that would be a total of 5. Okay, so bon chance, mon ami. That means good luck, my friends. Keep us posted on what happens to you in terms of your testing journey. And I'll see you Tuesday for the live stream Q&A. We do that 5:30 Las Vegas time each Tuesday. And I'll see you next time in the YouTube channel. Bye-bye.